Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of longer-term technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be talking about Bitcoin bull runs and bear markets, because you guys obviously know that 2018 and 2019 have been very bearish for Bitcoin, but of course that leaves the question, when is the bear market going to conclude, and when is a new bull market going to start? I think that is probably the most important question on all of our minds, and in today's video, I'm going to be showing you many, and I do mean many different technical indicators that I use to call a Bitcoin bull market, and I'm going to show you where Bitcoin lines up with these technical indicators and when they say we're going to be moving into a new bull market. We're going to be talking about all of that and more in today's video, guys. I think we have a really good video lined up for you here, if I do say so myself. So if you enjoyed today's video, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell, especially if you're new here. But without much further ado, let's go ahead and get right into it. I'm so interested in getting to the point in today's video that we're not going to be doing the crypto market recap. I'm going to be covering news a lot more on the channel, but we don't have any to cover in today's video. I want to dive right into it and talk about the cyclical nature of markets. The first thing that we have to talk about here is the fact that, like I said, markets are cyclical. What you see so many times in markets is that there are many different things that are kind of the building block or the foundation of a market. And one of those is the fact that markets are cyclical. And of course, that seems rather obvious, but it's important that we define our terms and we define the foundation of what we're looking at, that being a market. And of course, since markets are cyclical, what we see is that markets go into bull markets and then they go into bear markets. Markets go into rallies and then they go into downtrends. We see this on large scale where we see Bitcoin going on a bull market. You could say a long-term rally for 2 or 3 years, and then we see a longer-term decline in price action. But in between there, we see little rallies. We see little uptrends and then downtrends, uptrends, downtrends. And if we zoom into the daily chart, you'll see more. If we zoom into the hourly chart, you'll see even more. Markets are cyclical, and it's very important to understand that, because a lot of times what you'll see happen is that a market will do the same thing in accordance with the same technical indicators over and over and over again. Now, this is not a stock market episode, but I can show you an example of this. If we come out to the stock market, what we see is that whenever the stock market on the S&P 500 goes 20% below all-time high, a bear market starts. And it just so happens that whenever that happens, it tends to coincide with Bitcoin, the S&P 500 coming below this moving average right here, which is the 200 weekly moving average. It almost always happens that way, and it happens that way because markets are cyclical. Say it with me now. Markets are cyclical. Now that we've understood that, I'm going to be looking at the BLX, Brave New Coin Liquid Index Exchange for Bitcoin. You guys are probably familiar with this chart because this is one of the oldest charts on Bitcoin. This does show almost 10 years of price action on Bitcoin. Of course, Bitcoin is barely over 10 years old. I guess it's 10 years and a month right now old. This is on this is recorded on February the 3rd. But this price action goes back all the way to 2010. And the reason we have this up is because I'm going to be showing you a moving average that I need the market to be that old to use. Anyway, let's go ahead and dive right into this. What do we want to see for a new bull market to start? How do we see a reversal in a market? Well, Bitcoin's a rather young market, so we don't have a lot of data to look at, but what we do have is the 2014-15 bear market. And if you guys have been following my channel, many other crypto commentators' channels, if you've been doing your own technical analysis, you'll probably know that the market that we're experiencing right now, the 2018-2019 bear market, lines up almost perfectly with the 2014-15 bear market. We can make so many connections. We can connect $3,000 being analogous to $6,000. That's a very big one that a lot of people, including myself, have made time and time again. Those two levels are almost exactly analogous. We can make the connection that Bitcoin, after falling below $300, fell about 50% lower, down to around $150, which is what seems to be happening right now. Bitcoin fell below that analogous level of $6,000, down to 50% lower than that at around $3,000. We can make the connection that Bitcoin has retraced 85% from all-time high. We will find that basically the exact same thing happened over here at the end of this bear market. We retraced about 85%. That's not all. Billy Mays here. There's a lot more that I can go into, but I think you get my point. The 2014-15 bear market looks almost exactly the same and almost identical to the market that we're facing right now. The only difference is, in my opinion, is that we see the fundamentals are a lot better for Bitcoin and the price action is a lot higher, so those kind of balance out. With all of that said, since we understand that markets are cyclical, and since we understand that the 2018-2019 bear market looks almost identical to the 2014 and 15 bear market, well, let's look at some technical indicators that haven't become important yet, haven't necessarily started giving us bullish signals yet. Let's go ahead and dive into those. The first one that I want to show you is one of my favorite technical indicators, and if you guys watch Alessio Rastani, you'll see that he talked about this technical indicator in his video yesterday. Great video. Go watch his channel. He's a good guy. But I've talked about this technical indicator for a very long time, for almost a year on this channel. I've talked about it in exactly this method, using it on the weekly chart before, and I want to bring it to your attention again, because what he said and what I say I think is absolutely true. I think it's a very, very important technical indicator to be looking at. He used the 21 EMA. I use the 20 EMA. There's not much of a difference, but it's basically the same thing. What we see with the 20 EMA is that in the 2016-17 bull market, Bitcoin continually got support above this level. We can see we came down and got support right here. We got support right here. We got support right over there. If we zoom out the chart and we look over here, we see Bitcoin got support there and there and there, all the way up. Bitcoin never once went below the 20 weekly exponential moving average for the entirety of the Bitcoin bull market in the 2016-17 bull market. It didn't happen. We had a couple of candlesticks that went below there. Bitcoin breached it a little bit, but in general, you would say that Bitcoin never went below this level. And Bitcoin has basically never gone back above this level here in the 2018-19 bear market. We have seen that we've had a little bit of breakouts here, but we haven't had anything sustained. Bitcoin hasn't managed to stay above that level. But if we draw our attention back to that market, which we now understand is so analogous to the one that we're currently in, the 2014-15 bear market, we're going to see something interesting, and it shows up right here in October of 2015. When Bitcoin finally got above that 20 weekly... Oh, excuse me. Surprise burp attack. When Bitcoin finally got above that 20 weekly exponential moving average for the first time and managed to stay above it, right over here we had a fake out right here. Right over here, we had a bit of resistance. Right over here, we had a fake out. We didn't manage to stay above it. But when we did manage to stay above it, right here in October, we went on a bull market that literally saw Bitcoin's price action multiply by an order of magnitude. We went from around $200 to very close to $20,000. It was a very big rally. Now, let's look at what it looks like right now. Well, at the moment, this moving average is curving down because, of course, Bitcoin has dropped a lot. And if we were to extrapolate out what this market is going to do and what Bitcoin's probably going to do, what this moving average is probably going to look like in the next several months, probably by around the beginning of quarter 3, 2019, this moving average is going to probably take one of these trajectories right here. This is kind of looking like a hurricane storm path right now, but we're probably going to see this moving average take one of these trajectories. The point is it's moving down. And if Bitcoin doesn't keep moving down, if Bitcoin keeps trading to the side, stays above $3,000, or even stays above $2,000, by the end of 2019, we're probably going to see an intersection with this 20 weekly exponential moving average, and we're probably going to see a breach of it. If Bitcoin can get above this moving average and stay above it, then I have every reason to believe, based on previous history in the market and based on the cyclical nature of markets, that if Bitcoin does stay above it for a couple of weeks, give it a month or so, if we can stay above it, that would be a telltale sign of a new bull market. That's not the only indicator I wanted to show you. I told you at the beginning of the video I had a lot of indicators, and I was not lying to you. I have a lot more to go over. As we can see here, if we bring up my 4 moving averages, I'm going to go ahead and turn off all of them except the 200 because you guys know that I really like the 200. Let's go ahead and turn these off right here. This is the 200 weekly simple moving average. Just a second ago, we were looking at an exponential moving average. This is a simple moving average. And the entire reason I'm not on my normal exchange charts, Coinbase or Bitfinex, is because I wanted to use this moving average, and it doesn't show up on those charts because it's such a long moving average. It takes so long for this moving average to build. It takes 4 years for it to grow because of the 200 weekly moving average. But what we find, interestingly enough, is that in 2015, when Bitcoin was coming down here and bottoming out around $200, we saw that Bitcoin was getting support on the 200 weekly simple moving average. Isn't that interesting? Take a look at what's happening right now. Bitcoin, for the first time since then, we've had a bull market and a bear market in between those. For the first time since then, we've seen Bitcoin come down and start getting support on this 200 weekly moving average. Isn't that interesting? It's so cool to me that markets are cyclical like that. The markets will do the same thing over and over and over again. This is something called market structure. It tends to be that Bitcoin will go down and test the same level of resistance several times, and it will do it in the same manner that it has in the past. And the same thing is happening right now. If Bitcoin were to break below the 200 weekly moving average, it wouldn't be the end of the world. It would be bad. It wouldn't be the end of the world. It would be a break of market structure. But for the time being anyway, if Bitcoin does vaguely stay above this moving average, if we look over here, we kind of fell below it a little bit. If we vaguely stay above that moving average and we're able to trade sideways on into this moving average, the 20 exponential, and they come in and they kind of make this little triangle pattern almost where they're crossing and Bitcoin's being forced to either choose bullish or bearish, based on the fundamentals of the market and based on how many people are still in the market, based on the increasing volume after the break of $6,000, I would be inclined to believe that at worst what we're going to see is a temporary break of the 200 weekly moving average and an actual bullish break above the 20 exponential moving average. Now, don't take the time frames I was drawing there in mind. What I'm saying is this is probably going to happen by the end of 2020. This might happen somewhere over here in quarter 3 or quarter 4. I'm not saying this is going to happen in March, but this is something that is going to happen because this moving average is moving up and this one's moving down. They're going to cross, and when they cross, Bitcoin's going to have to choose. So I think you understand those two moving averages. Let me go ahead and get into a couple more technicals, and those show up down here on my oscillator charts. The first one that I want to show you actually has to do with MACD. What we've seen lately is that the MACD is very far below zero. It was very high above zero when we were at $20,000, but of course the MACD on the weekly has gone ahead and crashed. And what we see right now is that the MACD is coming very close to turning bullish. And you guys know I'm a big fan of the MACD. You guys understand why the MACD is so powerful. It's mostly powerful because so many people use it, and I think there are a lot of people looking at what I'm about to show you. And that is that one of the last times that we saw a bullish MACD cross below the zero level, right here, you can see it's right there at the beginning of 2015. Right here, the beginning of 2015. The last time that happened below the zero level was the beginning of an accumulation phase, which is what I believe we're entering right now. It happened right here. And that's interesting because if we look at the analogy between the 2014-15 bear market to the analogy between the 2018-19 bear market, that would line up right about here, which is about exactly where we're seeing this MACD cross happen. We're going to see this MACD cross happen, and it's going to go bullish in the next month and a half. It's probably going to happen before that. So keep an eye out for that, because that's the last time that that happened. The last time that we saw a bullish MACD cross that really amounted to anything. We did see kind of a fake one right here, but that didn't really mean a whole lot. The last time that we've seen one amount to anything, it was at the beginning of an accumulation phase, and that accumulation phase ended in the manner that I laid out in relation to the 20 weekly simple moving average and the 20 exponential moving average. There's a couple more that I want to show you. Let's go ahead and delete this stuff on the chart. And I want to show you the RSI. You guys also know that I'm a big fan of the RSI. That's why I always have the MACD and the RSI up. Two very important technical indicators. And one thing I also want to show you is that the RSI on the weekly chart for Bitcoin has come down and touched 30. It did that at the very end of last year. Currently we're hovering around 35 on the RSI. Very low figure for the RSI. But if we look back at the 2014-15 bear market, what do we see? Well, interestingly enough, Bitcoin at the exact same analogous time where we entered that accumulation phase, remember this is the same thing as what was going on with the MACD, right around that time back then, we hit 30 on the actual RSI. Now that's very interesting because all of these technical indicators, I've shown you 4, there's several more that I'm not going to have time to get to in today's video that show the exact same thing. 2 of them say that we're entering an accumulation phase, and 2 of them show what happens at the end of that accumulation phase. The MACD and the RSI say that we're entering an accumulation phase that will likely last between 6 and 12 months, and two more of the technical indicators, these moving averages here, show what's going to happen at the end of that accumulation phase. Bitcoin is either going to go bearish and go into unprecedented territory that we haven't seen Bitcoin do before, and that would be a breach of the 200 weekly moving average and start moving south. I don't see that happening. I don't see why that would happen. It doesn't make a whole lot of sense. Maybe it'll happen. Markets don't always make sense. Can't say it's going to happen for sure. But based on what we've seen before, we're moving into an accumulation phase that historically has ended with a bullish break above this moving average, moving into a new bull market. And based on all the data that I have at my fingertips, everything I have to look at between 2014 and the last second of 2018, and including the beginning of 2019, everything I can look at says that Bitcoin has just entered an accumulation phase that is going to last at most another year, that is going to end in Bitcoin getting above the 20 weekly exponential moving average, that is going to begin a new bull market. Maybe you want to repeat that and say that and listen to that again, because that was basically, based on all the technical indicators that I have, and guys, I literally do this every single day. I do technical analysis on Bitcoin every single day, and the long-term technicals tend to obey the market, the technicals. The longer term market tends to obey the technicals. And based on all the data that I have, I basically just laid out what is more than likely going to happen over the next year. Bitcoin's going to trade sideways, Bitcoin's going to get above the 20 exponential moving average, and Bitcoin's going to start moving to the upside, and we're probably going to see Bitcoin move back up and hit $20,000 in between 2020 and 2022. That's about where I put that all-time high return figure. It's about 3 years or so after the same thing happened back over here. I think Alessio talked about this in his video also. It took about 3 years for Bitcoin to get back to its all-time high. And if we were to extrapolate the same thing, since we've been analyzing the 2014-15 bear market so much, if we were to extrapolate the same thing, then we would expect for Bitcoin to get there sometime in the early 2020s. We were to just bring this over here. we would see that we'd get there somewhere in 2021. So there you go. I do expect that Bitcoin's going to return to all-time high, and I do expect it's going to happen sometime in the beginning of the next decade. And that sounds like a long way off, but guys, it's really not. If you've been here for a year or so, I've been here since long before we hit $20,000. I've seen the bull market, I've seen the bear market, I've seen both of them. I've seen crazy, over-optimistic exuberance, and I've seen absolute raging pessimism coming from places in humans that I didn't know even existed. It's really sad how pessimistic people can get, and it's really scary how optimistic people can get. If you have a level head and you look at the technicals and you understand charts and you do your due diligence to research and learn these markets, you can learn how these markets are going to move, and you can predict it with a lot of accuracy. People say technical analysis is voodoo or witchcraft and they don't think it works. That's complete malarkey, because if it didn't work, then we wouldn't see patterns forming time and time and time again, like I showed you on the S&P 500 earlier, and like I've shown you here on Bitcoin in today's video. Anyway, guys, that is basically going to do it for today's video. Tell me in the comments section down below what you think of that technical analysis. Would you like me to do some more long-term technical analysis? And what do you think about these 4 technical indicators and what they're saying? The 20 exponential moving average on the weekly, the 200 simple moving average on the weekly, the MACD and the RSI on the weekly. I have a lot more technical indicators that I could dive into, but those 4 are really the ones I needed to make my point in today's video, and that is that we're going to be starting a new bull market in the next 18 months. I do believe that based on everything that I can see, unless we have some curveball like the United States bans Bitcoin or something, that's probably what's going to happen. Anyway, guys, like I said, that is basically going to do it for today's video. If you do want to learn how to do technical analysis and you want some more in-depth reading and some more in-depth videos on every single one of these technical indicators that I covered and why they're so important, I do highly recommend the course that I put together, the Cryptocurrency Technical Analysis Academy. We've had hundreds of people go through the course. We've never had a single refund. I don't think, off the top of my head, that we've ever had a single complaint even, and people are really enjoying it. So if you want to learn how to do technical analysis, I do highly recommend the course. The link will be the first one in the description. Go ahead and check that out. It does help to support the channel if you go ahead and purchase that. I would appreciate it. Anyway, guys, I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.